Evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, April 27th, 2023. Another incredibly interesting day. As those who were trading it today, you saw that the market actually was just one big, solid buy program that lasted pretty much from about 11 o'clock Eastern to right on up and through the entire session, the balance of the session. We had one little downturn to that low at, that's showing it overnight. This happened, I have to go back and look because it was one little downturn that came pretty much after the opening. And I think, yeah, it was right there. That was the only downturn that I saw, and you'd have to go down on the lower time frame chart to see it. But it was buying up to there. We had one little sell, and the balance of the day was a buy. End of the day, we got Amazon's earnings, which every algorithm on the planet went buy it, buy it, buy it, buy it, buy it. And then they had their press conference much later, and there was a lot of talk, a lot of discussion, and when it came right down to it, they basically started to talk about that, as expected, the customers continued to evaluate ways to optimize their cloud spending in response to the tough economic conditions in the first quarter, and we, Amazon, are seeing these optimizations continue into the second quarter, with April revenue growth rates about 500 basis points lower than what we saw in quarter one. The stock initially spiked, closed at 109.82, spiked to 129. In fact, let me just go over and take a peek to show you where it ended up. Spiked at 122. Then let me go back over to here and then show where it went. It spiked at 123. And started to come back down, but then we got the conference call. Now the stock is lower than the close. It's down after the close, and so in fact it's trading right now at 108 approximately. So again, there's a lot of time between today and tomorrow, so a lot of this will get filtered through. But it was a reaction that was just totally bizarre, and that, oh, they must have blown the doors off. Oh, another one. And it was just that they had the earnings, the EPS, that were all beats and everything was fine. And then it was this forward guidance. So it's pretty much the same thing we saw in United Parcel Service. We've seen in other companies. We've seen in Google. We've seen in just different areas where the initial was showing that, yep, they made money for the quarter, but they're not forward guiding in that same vein. So I would suspect that we're going to start to see some of the air come out of some of these other stocks. And yet to be seen, tomorrow is, again, a Friday expiration, end of the month. So we're going to get a lot of posturing, changing, rotating, and now we might even see additional rotating back out. I don't know. But today was primarily a lot of rotating back into tech. And some of it, of course, was on Meta's earnings. Some of it was that they boosted Microsoft. They finally did push it above 300. And I think it got up to 307 or somewhere up there. But they just started going on stop runs, right? Because you have to figure this was 52-week, new 52-week highs, above 300, new 52-week highs. And so there had to have been a lot of stops sitting above there, and they just went on stop run after stop run after stop run after stop run and just cleaned it all out. And the stock was up substantially, now being slightly marked lower. So we're going to see how this all pans out overnight and then again into tomorrow. But it produced a dynamic day. But here's the deal. This is exactly what I said last night. If the NASDAQ is intending to go up in a third wave, it can't look back. It can't fail. It can't have these swings lower and then trying to rally it back. It needed to go, and it needed to go now. And that's exactly what it did. In fact, I was talking about how it needed to break back above, because we were, last night's update, we were talking, it was at 12,967-ish, or right in that area, that how it needed to get above 13,000. Then it needed to get above 13,100. Then it needed to get above 13,200. And sure as mud, so to speak, that's exactly what it did. Now, and then the earnings boost that the future got, based on Amazon, whether that was fair game or not, a trade is a trade, it popped above 13,300. So as of this close, now we're trading lower, granted, but as of this close, we were within 30 points of putting in a new high, which is what we needed to do. Now, how do I want to count this? Carefully, because this close, if they decide that's it, and I have to put a 5 here, much more comfortable doing that, because it's not this gigantic failure, right? Come out here, well, we're right there, basically. So failing here is a whole lot different than failing here or failing at a lower level. So a lot of information today, a lot of updating today. So, but the way I'm going to count it, because when I open this up, it really is coming in as like a 1, 2, 3, little teeny tiny 4, or 5 to put in wave 3. So again, it truly was breathtaking. Not as easy to trade unless you just kind of got long and you just sat and waited and just walked it up. Then it was an absolutely glorious day, because there was a definitive absence of sellers today. And the only thing that could really come up and say is that it was a lot of the macro traders. Finally, they come back to rotate for end of the month, window dressing, whatever you want to call it, which we get every month. And then at the end of the quarter, it's even more pronounced. But today it was moving back into tech. And boy, we saw all of our favorites. Initially, we saw that the tech titans, they were heading higher, they were doing well, and a lot of the others, particularly the chips, they were lower. Then all of a sudden the tide turned and everything went up. And I think basically probably by the end of the day, I knew it the last time I checked, it was about 70 up, 30 down. I bet you that changed going into the bell. How this all pans out, I'm leaving it as this is a third and we're in a fourth. So what I need to do is take out the extensions for wave 3 and now put in retracements for fourth wave. Because this third wave is so gigantic, it's going to be interesting to see where all of this comes in. So right off the bat, it has drifted. It's already below 0.236. 382 now is at 13,153, 154. If it comes down there, holds, and it does it in an ABC, great. Then we're going to continue to look for a move back up and towards those 134 levels up here. That's for the larger C wave to complete that primary B. That remains up here. But remember, anything above 13,350 gets us into that area where wave 5 topping out above wave 3, and all is then good and rosy in Elliotttville. So I'm going to kind of stick with this. And again, I just have to tell you, I truly was impressed with the markets today. I thought that it was kind of crazy. I thought, gee, I don't quite understand this rotation. I don't understand just how this all works. And I was constantly reminded that asset managers are doing their job. And so I needed to have a little bit of understanding there, because you see, my background is much different. I was a market maker. I was an options market maker. I traded for myself. And so I didn't have to rotate assets. I didn't have to meet obligations of how I presented my trading and my stuff to clients, or to the whose money you are managing, and being able to really keep that functional in terms of, if a market's going to go up or down, that you've got their money in the right place. So all of that understood, but when I'm watching it in action, I'm like, wow, I don't know. As a market maker, I'd be like, wow, what kind of opportunities you have. If you were sweating it out with a short position, it was incredibly uncomfortable, because there are things that you kind of, you rely, as a trader, you get gut feelings about things. And when you're watching this, it's like, oh, my gut tells me that this is just not right. And I'm looking at it as a fifth wave. So I'm feeling is like, well, you got to go up there. But I truly thought it would take more than 6 hours to get to these levels. And I thought we'd get a pullback, and in the wave 5, we would start breaking up towards those highs. Not in one day. So today, the NDX was up 353. The Dow was up 524, and the SPX was up $79. And at one point, it was up over $80. Those are huge moves for those indexes across the board. So it was amazing. Now, and this is against the backdrop of the bond market sinking, all of them down in the day. So it's like, okay, equities, are you kind of paying attention to what the bonds might be telling us? Hey, bonds, are you paying attention to what the equity markets are trying to tell us? And then you had gold all over the board. I mean, all over the board. So there was a lot of just wild gyrations in the various markets that was very impressive to me. And I mean, I have a lot of trading experience, a lot of watching markets. So in any case, I think that we still maybe got away 4, and we have one more run. Now, tomorrow's expiration, I'm not sure what earnings may be coming out pre-market, but after-market, there aren't any on a Friday. So that pulls us out to Monday. And then starting next week, we do have some, but the big one is coming on Thursday, May the 4th, and that's going to be Apple. Now, Apple traded above 168 today. So in advance of, well, if all these other companies are blowing the doors off their earnings, and Apple, they cannot disappoint. They're not going to disappoint. And that really was the first reaction with Amazon. Oh, they can't disappoint. And then, bam, it's not that they disappointed. Their earnings were fine. It was the forward guidance. And that's just kind of letting people know, folks, people are pulling back on how much money they're going to spend, even on web services. That is a big, 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 big moneymaker for Amazon. And so they overshot. And it doesn't for 1 second mean that the Amazon's web services are jittery or whatever. It just means everybody's kind of pulling back and keeping money more to them versus putting it out there. So I want to make that clear. It's like when we get these types of earnings and they dump the stock, it not necessarily is suggesting that that company is bad or in trouble or whatever, particularly when we are looking at when we're looking at more established, notoriously profitable tech companies or other companies that are very well established. So once again, let's get back to this market. So I do think that adjustments need to be made. And adjustments need to be made by the market on how do you want to evaluate this company? And why would you continue to think that it's going to continue to churn out stellar earnings and all this stuff if we start to have a slower economy, if we move into a recession, if interest rates continue to tick higher, et cetera, et cetera, et cetera. While this whole process of getting inflation under control, of moving through a corrective phase continues. So again, the rhetoric, the talk, all the things that swirled around coming from financial media today just continue to feed why this is rallying, what the Fed has to do now, et cetera, et cetera. Yet to be seen, folks. We're going to look for this wave 4. We have our levels. I would think 13,153 should be good. Now, here's the kicker. If this starts to collapse, it actually has to come all the way back down and drop below 13,000 again to nullify any additional upside and declare that today's spike high was the high. And trust me, it could all be worked out, and it ended in a failure. Otherwise, I'm looking for a 4, and I got one more lift to take us up higher. And that could happen tomorrow, or it can happen between tomorrow and Monday, or tomorrow and Tuesday. So even up to Wednesday, we could be getting it because of the premise of what they believe the Fed is going to do or not do. So lots of reasons that we could run. We shall see. We shall see. Let's go over to the S&P, which is not taking it quite as hard as the NASDAQ is right now. So here again, I have changed the labeling. And once again, and I'm going to, right off the bat, I'll tell you why. Because this went up past all 1.678, 1.70. It went through all of my extension fibs. And so I had to pull back, and I had to go back, and I had to take a second look at what I was counting up to that point. And I'm going to just pull it back into here. And so I had marked this again. I'd marked this the 3rd, and I put the 4, and it was a very sloppy but ugly 5th. And then I put the minor 5, the intermediate wave C, and the primary wave B here, here. And felt that 41.98, it ended in a failure, not a gigantic failure, but a big enough. Then I got this. I thought, all right, I need to present the alternate, which was always there, and still now counts what we were counting as 1, 2. So this is still 5. This is still 3. But this turns into a 5 all the way down. And actually, let me pull that. Let me add one more thing. Sorry, I forgot one component. Or we're going to go like here. We're going to change that to a 5. Notice my own mistakes, right? And then underneath that, I need to put the C. And that's going to be in the minute range. Nope. There. I'm glad I caught this now. Otherwise, I get a lot of comments later, I tell you. So I'm going to put that there and that there and do that. Okay, so then I bring this back up a little bit so we're all in alignment. So now it fits. You can see we got an ABC wave 4. Now, again, these 4th waves are large, but they're not really jumping and killing this market. So it didn't break the rule. So I'm leaving it. Got close, but it didn't. And then we had this huge rally. So again, I'm going to open this up a little bit. And to basically say that I probably have a 1, 2, 1, 2, 3, 4, and a 5 up to here. And that would be the little wave 1. And then we got a nice steep decline right off that. 106 down to 89. So about a 16-point drop. I'm going to put a wave 2 there, and this all is wave 3. And this would be wave 4, and we have one more shot, S&P, to get above 4,200. So what do we want to say for this fifth wave up? Let me pull this back out to the 4-hour chart. Let me open this up. And now we're going to put in our fibs for wave 5. And that was wrong. So we're going to go here to here to here. And I'm going to go from here to here to here. Nope. Excuse me. There. Now, first thing that I always need to remember, and I often forget to include, the first thing that Elliott always tells me that wave 5 can be equal to wave 1. So here we have 38. Let me just go from that high, which was 40.73, and we take it to from that low, which was one more over. Thank you. 38.39. So 234 points. So if we're going to look here, 40.67. We have 43.01. That's where it can come in, 43.01. We have where wave 5 would be equal to wave 3, which I'm not really looking for, up at 42. Where else we have wave 5, 618 of 3, that kind of can fit, 42.27. But we have 43.01. Do I think it can get up there? Well, technically, yes. But the other next one would be, what did I say, 239 times 0.618 equals 147. So if I got 147 plus 40.68, 42.15. Still better. That's realistic, right? And what that then suggests is that wave 5 would be 0.618 of wave 1. So we start working those relationships as well. But I like to use that its first cousin would be to wave 1, but it also has relationships in my mind to wave 3. None are listed in an Elliott book, but I have found over my time is that wave 3 is the longest and wave 5 is equal to 1, or wave 5 could be 0.618 of wave 3. And that puts it very close. This is 42.27, and 618 of wave 1 is 42.15. So that's why I keep those in line, because they line up very closely with one another. So I'd be looking for here, and it's still much better. But if we had to, we have 42.50 right there. So we have fibs that'll take us up there. So that part works. So again, I will take this one down, because I would say that we're going to find, and where we have, what did I say, 43.01. I put this in, drawing tools, line, oop, come on, align. 1. Come on. So, all right, just put the line in, add the drawing, add the line. Wrong way. I wasn't asking that kind of a line. I just want a vertical line. Drawing tools, vertical. Anyway, I'll get it there. So, well, here I could put this line, put a line, get it back up here to 43.01, put there, activate the drawing, see if I can't bring this up. Forget it. Not very good at that one, am I? I will figure it out. 43.01, we'll remember that. But you also have 42.27, 42.50, and then 43.01. 42.50 clean. But that suggests it gives us room for continued upside. And that's what's more important. So again, a little bit of a 4. Let's throw in our fibs on where we think possibly this fourth wave could come back. And come on. And we'll just run it up because it was a pretty big 41.37. So we're already back down 41.48. We're really kind of sinking here and here. So both very realistic levels to get down to. We'll see. And then still expect. So I got a 1, a 2, a 3. This will be the 4, and we'll get going in that 5th. And hopefully get ourselves above 41.98. And then outside of all this, bring it back over here, we want the C wave to get above this A wave. So what we want to put back on is I'm going to take this off for right now and return to put on just for the C wave. And let's see what we got lining up for what we've just talked about. So I'm going to put this one back, 42.53, 43.11. And we got right in between, 43.01. So we leave those up there. And this is where wave C would be 618 of wave A. Yeah, that works. 70.5, it works, but 43.01 comes in before that, and that is where wave 5 would be equal to wave 1. I'm going to complete right there. Tomorrow should be another interesting day. I hope you all had good time today. And our next update will be, unfortunately, not until Sunday. And that will be on April the 30th. And so tomorrow, have fun trading. Talk to you all on Sunday.